Hey everyone, it's Richard. You're watching The Plain Bagel. It is that time of year once again. No, I'm not speaking of Christmas nor the New Year celebrations, but rather the one time of year that everyone's looking forward to, The Plain Bagel Finance TikTok review video. We might be nearing the end of the holidays, but we're keeping the festive sweater season alive, keeping things snug here on The Plain Bagel. Emma, could you throw a crackling fire in the background, please? Thank you. But it's a really interesting time for finance TikTok. Bitcoin has touched $100,000 a coin. The platform faces a potential ban in the United States. So during this tumultuous time, I've been summoned once again to review some TikToks, give some input, and then hopefully make it productive so we can walk away knowing a bit more about finance, investing, and all that good stuff. So without further ado, let's hop into it.
Imagine being so stupid that somebody's out there printing money. Somebody's printing money, and on the counter, you're working for it, and then you're getting taxed because they need your taxes in order to run the government. When they could just print it. It makes no sense whatsoever. So stop working for money.
Imagine being so stupid that you have a job. Cringe.
Start working towards a life that instills freedom and instills your ability to produce money without you having to work. If you're producing, you're always being able to generate income, but you don't want to be producing just with your time. You want to be producing with systems. Now you have AI, now you have automation, now you have software. Dude, you can literally be making money while you sleep.
So to try and make this productive and kind of address what he's getting at, there is actually a school of economic thought known as modern monetary theory, a bit controversial because it essentially argues that government deficit balances don't matter. But it does give a good sort of mental model for understanding how governments treat money. And under modern monetary theory, it argues that there's taxation for two kind of key purposes. The one is that it actually gives your currency value, right? If you give people a liability that they have to pay in a given currency, then they're going to look to accumulate that currency. And the second argument is that taxation is what offsets the inflationary effect of money creation. So if you think of a balloon and money entering or air entering the balloon, then tax is kind of what lets the air out or diffuses some of the pressure on the balloon. Now, it's not to get into the ethical dilemma that brings up, but it's just to highlight how governments generally treat money. It's not that they tax and then spend off the taxes. It's that they spend and then tax to offset the inflationary impact of that spending. It can be tricky to find that balance of, stimulus spending and the like, and then where you tax to properly offset that. And that's where you can run into issues where you have inflation run out of control. But it is a really interesting topic and model for understanding how government money creation and spending works. Although in this case, it is kind of just being used to sell a course to disenfranchise people, which is unfortunate. It's not what you want to do. If you want to be financially free, you should buy my course, which is only $200 a month, where I'll teach you how to become your own Jerome Powell. Limited space and the price goes up to $20,000 in 30 seconds. So make sure to sign up.
If I were to start over with investing, then these are the three things I would only invest in as a complete beginner, coming from a 36-year-old former public school teacher with a net worth of $2 to $3 million. Feel free to save this video for later for reference. First, I wouldn't invest in meme stocks, individual companies, IPOs, or even cryptocurrencies because it's way too volatile. Instead, I would invest in ETFs that track the S&P 500 or the top 500 companies in the United States like SPY. Here are some other alternatives that are also good too. Next, because I'm young, I would invest in ETFs that track technology companies like QQQ, which tracks the NASDAQ 100 or the top 100 technology companies in the United States. There's usually a lot of volatility in this ETF, but in the long term, there's a lot of potential for growth. Next is SCHD, which is a dividend-paying ETF. This is a little bit more on the boring side, but I do like getting consistent income every quarter.
Yeah, nothing inherently offensive, broadly diversified, so relatively beginner-friendly. And kind of the typical index investing advice you'll come across online. Just a few kind of nitpicky points to add something to the conversation. One, like we've talked about in the past, the S&P 500 specifically has become more concentrated over time because it's market cap weighted. Four of the positions alone represent a quarter of the entire index, so it's not as diversified as it used to be. Also, while it might feel like a passive investment bet, you do have to be aware that you are making somewhat of an active call when you buy the S&P 500 because it is US only and large cap focused. So you're betting on those types of stocks and leaving out another universe of positions out there. And finally, when you buy multiple index funds like this, you do have to be aware of false diversification. While buying multiple funds might feel like you're even further diversifying your portfolio, because there's going to be some overlap between these positions, you might not end up with as big a spread of investments as you would expect. For example, if you look at QQQ and SPY, so the NASDAQ and the SP 500 index funds, you can see that based on weight, there's actually a 49% overlap between these two funds. And that's in part because if you look down here with the top positions of the two, they're very similar. And the top 5 positions for both funds represent 25 to roughly a third of the entire index investment. Now, the third fund does have a lot less overlap here, but you get my point. Just something you have to keep an eye on when you buy multiple investments like this. And you don't usually need more than one index fund if it's doing the job that you want it to. And if you don't want just an S&P 500 fund, given the concentration risk, there are equal weighted S&P 500 funds where they don't base it off of market cap, so you don't end up with this top heavy sort of index. And there are other index funds that are more broadly diversified than your typical S&P 500 index funds. So while you might feel safer by having multiple funds in your account, you can usually get away with just one fund if it's doing the job you want it to.
Son got rich off Dogecoin and he's only 11. Yes, this is crypto parenting gone right. Every time Jetman gets his allowance, he puts half of it into the bank and half of it into crypto. I match that crypto and he picks what he wants to buy. Jet, what did you decide to buy and why? And this was a long time ago, like when we first started doing crypto.
Dogecoin because I like the puppy.
Dogecoin because he liked the picture of the puppy. It was 7 cents stacked away. Today it's at 38 cents. And I believe it won't be long until we see it at over $1.
I'm rich.
You, Elon.
I don't want to comment too negatively on this. Obviously, it's a kid and his mom. And the actual kind of habit of putting money aside regularly from a young age, even investing some of it, great. I don't know if I agree with the speculation aspect of it. Also, I think that's hyperbole that he's rich. You know, even if he had $1,000 from 7 cents to 40 cents, maybe a couple months worth of salary, which is awesome. But saying he got rich, I think that's just to try and draw attention to the mom's course or whatever she's selling. But yeah, I would worry about taking this more kind of gambling approach with money at such a young age, right? To kind of show someone, hey, look, you put some money in something because you liked the picture and it blew up in value. Isn't that amazing? Doesn't that feel great? I feel like that's going to have some money management consequences down the road. I think the best thing you can do with kids, if you want to teach them investing early, is to set it and forget it, not to watch it or glorify when you have this sort of moonshot of the money you invested, to just highlight, hey, we're putting money aside. It's going to generally grow over the long term. If we're doing a smart approach, which, you can debate that there. But then again, to be fair, he is outperforming me. So I guess there's that.
Nvidia has been loading up on AI penny stocks. Here are 3 stocks that they're buying and why you may want to put them on your radar. Starting with their smallest holding, NanoX Imaging, ticker NNOX on the NASDAQ. It's a $400 million company that recently received FDA clearance for its innovative X-ray systems, which leverage AI to enhance diagnostic accuracy and efficiency. Next is Recursion Pharma.
So I don't know anything about these stocks. Looking at them though, SoundHound's kind of the only one I'm familiar with. And, I think Nvidia buying these stocks is somewhat a show of faith in these companies. But, as we've talked about in the past, one sort of positive data point is not nearly enough to warrant investing in something, especially when you consider that companies like Nvidia, they have so much cash on hand that's quite common for these giant firms to just invest in a bunch of ventures and startups, because if one of them does well, they can adopt the technology themselves and do something with it. And if it doesn't, it's not even a drop in the bucket in terms of how much they're investing relative to their pool of money they have. So definitely not a strategy an individual should look to replicate. It's also publicly known at this point that Nvidia has bought these stocks, so buying off of that information is not itself going to earn you excess return. And you have to be careful when you invest in sort of these tech startups, whether it be biotech or AI startups and the like. If you're not an industry expert, which most of us aren't, it's very easy to be convinced by management of one of these companies that they have the most promising proprietary technology in the space, right? If you get your information from the person running this business, it's going to sound like they're the best operation. Meanwhile, if you go to a competitor, they'll convince you that their proprietary technology is the best. And again, if you don't have that industry expertise, it's going to be hard to compare the actual technologies and the feasibility of bringing that to market and competing in the space. Now, again, I haven't dove into these companies. I'm not saying it applies to them. I'm just highlighting it's a risk you have to be aware of. And it's why a lot of people say to operate within your circle of competence when you can understand the businesses you invest in. That's not to say you can't invest in promising technology stocks or whatever, But there are things you have to consider, right? And it's worth looking into suppliers, customers, competitors, and see how they view the technology and how that compares to what management is describing about their offering. Because if you just get your information from the investor presentations of the company itself, you're going to be convinced that that company is going to take over the world, right? Everyone's going to talk up their business to get investors.
So what is money?
Oh, another one from him.
Technological advancement of commerce. 4,000 years ago, you owned a beautiful plot of land with great, beautiful olive trees, and I owned 50, maybe 70 cows. And I saw that plot of land. I said, you know what? I want that plot of land. You already have cows, actually, so you don't need the cows that I have, so we can't actually transact. So I have to go sell my cows for some pigeons because you want the pigeons. Now I come back, I bring you the pigeons. One of them dies, so I have to go back and get another pigeon. And then finally I get the plot of land. So the problem was with the bartering system, there was no ability to scale, no ability to build monopolies, because there was no ability to sustain wealth, and there's no what? Medium of exchange that we both agreed upon. We introduced the next form of bartering, the next form of commerce, coinage. Coinage is a technological revolution. It was the first time that we all agreed upon what was something and what was the store of value.
So I'm going to be really annoying here. I'm going to put on my actually glasses. The idea that societies originally operated off of barter actually came from Adam Smith, his book, A Wealth of Nations, which is viewed by many as kind of being the first modern economics book on the topic. And in this book, he basically makes the assertion that thousands of years ago, societies had to barter to trade. You know, if you had your cows and you wanted sheep, you had to find someone who also had sheep and wanted your cows. And it was a very inefficient system, so people invented money. That's kind of how the narrative goes. The thing is, it's not true. We don't actually have any evidence of societies operating off of barter. There are instances of barter occurring, but it was never the main form of trade for a given community or settlement. What we do have evidence of are credit-based economies where people would trade based on credit owed to one another. And if you're wondering what that means, take this example. Imagine that you're at a party with some good friends of yours and you're feeling pretty hungry. You see your good friend Jimmy, he's ordering some takeout. So you say, Jimmy, would you mind adding a pad thai to your order? I'll owe you one. And Jimmy, knowing that you're good on your word, that you're trustworthy, he agrees, and he now has an IOU from you. If you're truly a credit-worthy borrower, that IOU is effectively money now, right? Jimmy could go and pay another friend for something with that IOU, get a slice of pizza at a party or whatever, and say, oh, okay, Jimmy will now pay you back what he owes me. Now, it's a crude example, but gives you an idea of how communities were more likely to have operated than the barter system, because you also have to consider these people in these communities were much more tight-knit than we might consider ourselves today in a country or as a community, because they relied upon one another. So those IOUs were a lot more important and more tangible. And so you likely had the person with the cow give the cow to the neighbor, knowing that eventually they'll either be paid back something of equal value or that they can pass that IOU on to someone else as a form of currency. And we have evidence of this as far back as, I believe, Mesopotamia, which is a 4000 BC civilization. I think one of the earliest civilizations we have evidence of, which I believe they used clay tablets or something of the sort to represent these IOUs. So yeah, really roundabout long way of saying that barter never really existed. There's often this narrative that money's had this linear progression. That's not really the case. It's fluctuated quite a bit over time. And credit-based systems have existed quite a long time and are quite similar to the current system we have today of fiat currency, where instead we're now using government IOUs as the basis of our money. Anyway, hopefully you found that interesting and I didn't just waste 5 minutes of your time.
The number one crypto that I think everyone needs to start watching right now going into 2025, I believe that is LCX. I think that is the number one crypto that everyone needs to have their eyes on, simply because of what they are doing. They are tokenizing real world assets such as gold, silver, diamonds, and real estate. Now, if LCX was to capitalize on that market cap of gold, which gold's market cap right now is sitting at $13 trillion, if they just got 1% of that, 1% could make LCX go over $100 today, which LCX is sitting at 15 cents right now. That is basically a 1000x on whatever you put in. So yeah, I think LCX is the number one coin going into 2025.
Just a cheeky 100,000% return. It's that easy. Yeah, we're starting to see a lot of that stuff come back. It's not to say there might not be demand for tokenization, but the idea of, if we just get 1% of the gold market, if this just becomes a dominant thing for tokenization. There's no other competitors. We're going to dominate everyone, dominate all traditional alternatives in the space. Then we're going to skyrocket, right? It's a very effective way to frame something that otherwise sounds impossible, which is a, 100,000% return. And I'm definitely not an expert on it, but I don't know if there's intense demand for tokenization outside of cryptocurrency communities. I know, people love decentralization and blockchain and things like that. The actual transfer of assets or identifying ownership, which is, I'm guessing, kind of the main arguments for tokenization, aren't really the expensive or tricky parts of custody. Then again, I don't know what demands will be and what people will be interested in the future. Maybe tokenization does have a space. It does just seem like the cryptocurrency version of securitization, which is already pretty well established. But maybe you see a bit of a toss up there in terms of what people choose in the future. But I definitely think Bagel Butt Coin is a better investment. There's 560 million cryptocurrency investors around the world. If we get just 1% of that, we're going to the moon.
Meme coin is a scam. I just made my own fucking meme coin. This is the next shit. If you trying to get rich, go buy this coin. If you lost any money from meme coin, this is your chance to make it back right now. The Telegram and the CA is in my bio. Go buy that shit right now while it's cheap. This is your chance to make millions of fucking dollars.
Hashtag not financial advice.
You just a dumbass, I ain't gonna lie. Your dumbass will go buy some stupid ass coin that dropped to zero, but you won't buy the coin that's definitely about to go up. This is your chance to make a whole bunch of money. Do not miss out on this opportunity. You already missed chill, guys. Do not miss.
I did miss chill, guys. That was devastating.
Friends and family so they can make money too. We locked in. 100 mil market cap to the moon.
Look, I know cryptocurrency, we don't like regulation. I think we can come together on this. I do actually think a lot of instances like this are illegal. We had the Haktua coin recently. There's been lawsuits there related to the disaster that was, where Haley Welch, random internet celebrity that blew up, launched something and then immediately crashed in value after it was launched. But the reason why things like this are able to exist is it just takes time for regulators to react to more kind of niche examples, right? It's just the way crime always works. Crime is quick. Regulators have to do things by the book. It takes them a long time to take this stuff down. So be safe out there.
It is so funny how literal astrology can be sometimes. So all over the news the past 10 days since Trump got elected, everyone's talking about how crypto is just skyrocketing. It's finally going up after a long 4 years of it being super stagnant. Trump is literally saying that he wants the US to be the crypto capital now. And what's going on in astrology? Pluto is moving into the sign of Aquarius. Pluto rules
Did notice that.
big money, wealth, power. It rules the 8th house of your money making you money, which means investments, stocks, real estate, all things in that realm. But it's going into the sign of Aquarius, which Aquarius rules everything futuristic, such as technology, AI, robots, innovation. So I think this is just the beginning. This is just a tiny floodgate of this coming in, but it's just getting started because Pluto is just now entering Aquarius and it's going to be there for 20 more years.
20 years. That one's actually not too bad because there are people who are using astrology to pick stocks and crypto on TikTok as well. That I've come across some of those. And again, going to be really annoying here, but something we talked about in the past is that one thing human brains are really good at is identifying patterns and connections among data sets. Unfortunately, however, because our brains are always looking for patterns and get a little reward every time we find one, we can often draw connections that don't really exist between two different data sets. There's been experiments about the illusion of control, the idea that if you put someone in a room with a button and they push it and they put a different data set like the stock market on the screen, humans will often believe that they're controlling what's on the screen with the button. And in fact, there's a variant of that not too long ago where they had a flashing light and the button, the light was randomly turning on and off. And they asked participants if they believed pressing the button affected the light. In reality, there was no connection, but they found that people who were more superstitious more frequently reported that there was in fact a connection between the button and the flickering light. And while this is obviously an extreme example of people drawing connections where one might not exist, you see that a lot with different type of trading approaches, especially with technical analysis. It's not to say all types of technical analysis, but when it comes to these simple trading patterns, like here's a triangle, therefore the stock's about to take off, it can be really dangerous to rely on that sort of shallow analysis, because you could see the same pattern emerge in a completely random data set. It has no bearing on what the future performance of that stock will be. So you have to be careful relying too much on that kind of stuff. You know, the human brain, great at quick reflexes and drawing fast connections in survival situations, not a whole lot of benefit when it comes to analyzing stocks. But that is the last TikTok of our TikTok review today and our last video of 2024. Thank you for joining me today. I hope you found this video helpful. If you did, please do make sure to like, subscribe, all that good stuff. It does help the channel tremendously. And let me know your thoughts on finance TikTok, any of the TikToks that we looked at today. I also welcome any feedback. If you enjoyed the tangent deep dives, if you found them annoying, genuinely, anything and all is appreciated. Have a happy rest of your holidays. I wish you good health. We'll see you in 2025. And as always, be safe out there.